It's one, two. There we go. Thank you for highlighting that. Really appreciate that. I think now you can hear me. If you can't, Ed, just let me know again. Afternoon, Alberto. Good to see you back. Looking for another nice day today. Good green day. It's a lot of red. There's not a huge amount of green, so we've got to be selective. See if we can't get 10 cents on this. Break of $7. It got rejected at $7 previously. Let's see if we can't get 10 cents. Hey Mike. Hey Shimwari John. Morning Kyle. Yeah, jobless claims. I'm not too worried about the jobless claims on this stock. Jobless claims don't tend to affect the market as much as CPI and PPI data, and we've seen how that went. I think the volatility is still in the banking sector. Let's see. Morning, Captain. How are you today? So happy Thursday, everybody. What does they call Thursday? Friday, Junior? Looking for the retest of $7 here. Spreads are 2-3 cents, so might not get a full $7, a full 10 cents on it. Okay, if this breaks lows, I'll just get it. Oh, we're getting a bit of wide spreads, rangy spreads there, 10, 12 cents. My goodness. Get out. Damn. Market offering. It's got to be a market offering. That's got to be a market offering. Oh, look at that. 3 million private placement priced at the market under NASDAQ rules. Ouch. Lucky. Lucky. I don't know about lucky. That's painful. Had a good rally yesterday, and continuation this morning, and then they just hit the market offering. Can't short. I wouldn't mind if I was able to short it, but it's well, it's shortable. I've now got to locate shares because it's hard to borrow if I wanted to. Oh, I've not bought back in. I've not bought back in. I got out. Morning, J-Spec. That's painful. No, look. We move on. That hurt. The market offering. I just got in it as we made new highs here. So we got a nice little move up, the pullback. We made new highs. I got in for the move up to $7 and they hit the market with an offering. I wasn't too worried about jobless claims coming out. That's not going to affect it. It was the wait. That's the risk you get with pre-market. No, we can recover it. We can recover it, but that does take a big hit off the number. We started today with 27,000. We've just lost 7,000, so we're now down to 20k on the small account. Nah. Ouch. We'll be back. We'll be back. And that can always happen. I would advise that you always just one of those things. One of those things, and then you've got to place an order that's going to get you out. So limit orders, you're just getting blasted out. It's just not. Oh no, I'm not worried about that. It'll well, I can scratch Thermo off the list for today. Thermogenesis. So that's going to be a nice one for the trade recap. Ouch. No, J-Spec. I most of my losses happen on Mondays, but I guess this is the market taking revenge for me having a good Monday. 27%, 28, 30% it dropped. Oh, whole $1.50 I lost. And you've got to take that. So when you go in big size, well, say big size, I have 5,000 shares there. So when you're going in with shares of that size, you've got to be able to take it on the chin, and you don't really want to be going in with 5,000 shares if all you've got is a 5,000 share position, a 5,000 share equity. So that's the risk you take. It is a risk you take, but that's kind of max loss on that account hit. But I can't. If right now there's no volatility. I mean that was volatile, but there's no volatility at the moment. So there's no coming back from that today unless the market picks up. It's been so quiet this pre-market. Let's have a look at Koyo. That this pumped up. So this one, to be fair, you had the devil horns up here. I would have been worried about the devil horns up here. The move up, the pullback. Yeah, it's a massive fake out. So it's the second pullback, bounce on the VWAP. And you've got reasonable volume as well going up. So that's just tough luck. If you got caught in that one, but for the break of $3, that's tough. That's a tough break as well. What was the breakthrough? The VWAP got you. All right, okay. No, I wouldn't. So the breakthrough VWAP, what you've been looking for is a confirmation. You're not getting an increased volume on the breakthrough. I don't know which one you're looking at. So the breakthrough VWAP here or here. Because this one, you've got it's right below the $0.50. So I would have waited for the $0.50 there. Break above the VWAP, break the $0.50, maybe test the VWAP as support before continue to move up. Otherwise, no. Yeah. Thermo, you can go wash. That's painful. Well, we can make it back at some stage today. Hey, Ferrell. I was okay. I was having a great week up until like 2 minutes ago. These things are sent to try us. They really are. And that's why, and it's things like that's the reason that, well, one of the many reasons why day trading is hard. It's frustrating. There's arguments to say that, you can't predict something like that happening, but you can take measures in place. You can look at what stocks you're trading, and you can do the research beforehand and make sure, is there a shelf registration there? Is there some, I mean, if I look at that now, let's have a look at the, could I have taken measures to prevent that? That's the question. And the answer is probably yes. When did they do the shelf registration? Let me see. Yeah, it's October though. So they did the shelf registration back in October. So there's my own fault. I should have been wary of that. But the pre-market, because you don't have the safety nets of volatility halts and stop losses and stuff, it's always a risk you take trading pre-market. So yeah, I guess that's we've got to come back from it. $1.50, almost $1.50. Yeah, this needs more volume. No, it's actually it's not bad volume. Got caught in a flush, Jack. Absolutely. What's going on with the US banks? Any news came out? Well, not really. I mean, we've got job data came out at the bottom of the hour. Didn't really affect the market too much, but the market's selling off. Federal Republic is struggling. It got downgraded to junk. The banks are struggling. basically. And it's what's actually happened. So to break it down, for those of you who don't understand finance and what's actually happening. So before all the interest rate hikes, I mean, you have banks that were they were giving out the kind of 0% interest on deposits. So you put a deposit in there, and then what these banks were doing is they were creating bonds and buying bonds that were giving out kind of 1.5% to 2% interest. So they were actually making money on your deposits. So, and that's what banks do. They invest your money to get a return and then give your money back to you. So anyway, that's what happened. Now since that, the interest rates have gone up. So now there's bonds. The bond market is now growing. So you can get bonds that are delivering like 4.5%, 5.5%. And that means that the 1.5% bonds that these banks like Silicon Valley and Federal Republic have not been able to, they're pretty much worthless. Who wants to buy a 1.5% bond when you can buy a 5% bond? It basically means that they're undervalued or they're not good in the market. So in order to get back into the market, they then need to sell these lower return bonds at a loss, because obviously who's going to buy them at market rate when they can buy a better bond for the same price and gives off better returns. So they go to the market to try and sell these at a loss, and as a result, to cover the loss, they then look at trying to raise liquidity and try to get more investment or hit the market with additional shares. As a result of that, the people get spooked. They start to withdraw the deposits. And when I say people, I'm talking about companies. A lot of these startup companies and equity management companies. They start to withdraw the deposits, which creates further issues in terms of liquidity in the bank. Creates a bank run, and then everybody gets spooked, wants to withdraw the things. They can't raise the capital, so then they look at a sale of the company to a bigger bank that potentially could save them. No bigger bank wants to take that risk in the current climate either, so they end up going into liquidation, and that's what's happened. And then you get the what's known as contagion, which is what's happening now. So that was SVB, and then you get the contagion of what's happening now as other people get spooked. They're like, okay, well, what's your Mr. Bank, Federal Republic Bank, what's your position like? What are your bonds that you're holding like? What's your exposure to this? PacWest, what's your exposure to this? And people start withdrawing their deposits, creating a liquidity crunch, and then the banks are in free fall. And before you know it, you've got a bank problem. Now, it's a regional bank problem, or was a regional bank problem at the time. It could have been prevented with certain regulation. Funnily enough, I was reading today that that regulation was removed. They had the regulation that would have prevented this back in 2018, but Mr. Trump and his infinite wisdom decided to remove the legislation so that they could do this. And less regulation, more creativity and more inspiration, I think is what they were looking for. And then you end up with this situation that we're now in, because it was okay with the less regulation when the interest rates were so low, but with the Fed hiking the interest rates higher and higher, and this is why we're looking at the Fed now next week. Will they pause to give some breathing room to these banks that are in trouble, or will they continue trying to get inflation under control? And they're in between a bit of a rock and a hard place right now, is the Fed, because they need to continue to try and get inflation under control, but because it clearly isn't. But they also need to protect the banks and people who have the depositors. Now, they just seem to, on the face of it, I don't know, I've not looked into the actual writing of it or the underwriting of it, but verbally it sounds like they just issued a blanket guarantee to depositors across the US, in which case that's kind of scary. Because if they do that, it means that we end up printing more money, I'm not in the US, but it means the Fed ends up printing more money to cover that, and inflation continues to rise even higher. And then the interest, and you end up in this spiraling situation, and the economy collapses. So there you go. because Nasdaq isn't really affected by the banks. Banks are really, it's the Russell index is where the banks are sitting. The Nasdaq 100 is what you're talking about. The Nasdaq as an exchange, that's one thing, but the Nasdaq 100, which is the index, that's tech related. So it's tech stocks, whereas the SVB would have been part of the Russell 2000, for example, the small cap index, Ferro. No, actually, Ferro, Credit Suisse actually got support from Saudi National Bank late last night, which is why it's rallying this morning. Well, I just checked the SEC files. You can get that in Benzinga. I go to Benzinga for most things, so I check the SEC registrations for the shelf registration. Like Calvis, I wouldn't say it's Joe Biden's fault. It's a global issue, not a US issue. But you know, I see where your politics are right now. The banking issue is again, it's a political issue. Could have been addressed with some regulation. Yeah, well, Kyle, it was in his interest to do that. SVB wasn't insolvent for at least 6 months. It wasn't insolvent until it couldn't raise funds to cover the liquidity gap that it had created for itself. And the liquidity gap was created as a result of rising interest rates. Because with rising interest rates comes the rising bond returns, and the bonds that they'd invested in weren't meeting the latest. So that's where it's come from. So over the last 3 to 4 months, SVB has had an increasing liquidity gap, and that's where that's come from. So, and then there's a knock-on effect. The contagion effect is what we're all experiencing right now. Morning, MMT. Morning, Robbie. Well, you're always welcome, Amos. Hey, Robbie. Not. I don't know what the balance sheet looks like with FRC. Well, FRC is not looking great. PacWest is not looking great. So FRC is down at 2021. I'd be shorting it now, but it's hard to borrow, so I'm not going to bother. So that's just. Yeah, let's go to FRC. Let's look at the chart. What we're actually talking about. So this is FRC. Let's look at it. Let's zoom out a little bit so we can see what's going on here. Well, this is FRC. It's 6 o'clock this morning. It's at 5:30 this morning. It's just been in free fall. It hit a low of. Why have I not even got lows here? Oh yeah, I did. No. It hit a low of 1889. Hit a low of 1889 this morning, but it's in free fall. Had a little bit of bounce on that low, and then it's still falling. Yeah, so Credit Watch by so Pac's the next one. So it looks to me like the First Republic, that's a Federal Republic. It's a completely different bank. First Republic Bank is the one that's in the most trouble right now, and it was downgraded to junk yesterday by S&P. So what you don't want to, I think it was, I can't remember who it was that said the words junk and bank, you don't want to hear those in the same sentence, really. And absolutely, if people get spooked. I'll tell you what's going on with LiPo, if I can. Yeah, so Lepella Pharmaceuticals has completed its phase 2A clinical trial evaluating the safety and efficacy of its drug candidate for hemorrhagic cystitis. It diffuse inflammatory conditions of the urinary bladder, and as a result, that's why it's moving up. So yeah, it's phase 2 clinical trial results. That's why LiPo is moving up. It's a, excuse me, it's a 3.25 million float, not really shorted. It's already up. It's already 4x volume today. So let's have a look at LiPo. I can't look at that because I'm not shorting. I don't have the shares to short it, and it's on short sale restriction. I don't have the shares to short it, so I'm not shorting it. Right, LiPo. Well, it's not. Yeah, it probably is. Out of PacWest, FRC, and Western Alliance, I think that probably is the strongest of the three. Looking at it right now, it's certainly the one that's least down out of the three. But it's still down. I mean, that's what, 7% down on the day, whereas you look at First Republic's 32% down on the day. You've got PacWest, which is like 17.5% down on the day. We'll see, money. I want to see it attack $3. Live person's down. Oil. Yeah, there's not a lot else moving. LiPo has a wall at 185. Do you mean 285? It's at 281 right now, Calvus. Yes, they do. They do. The volatility is in the bank sector for sure. It still is. So let's have a look at Schwab. Have we got? Yeah, Schwab still got leverage on it. Not moving much. Like I say, Schwab's probably not the least in trouble. I just kind of got tucked into the melee, but I don't think Schwab's in trouble. Let's have a look at this. You've got a bit of a double top. Look. You've got the $half, which is very close to the. So I'm looking at Western Alliance. You've got the $half, very close to the VWAP. What I would say is it needs to hold the VWAP and the $half. Get it above the $half, maybe test it as support and come back, and then break a new swing high. At the moment, it's a bit of a double top formation. So you want confirmation. You want an increase in volume, so $0.75 level, 30.75 probably is a reasonable expectation for an entry. There you go. It's 30.74 there, so just wait for your opportunity. Again, not financial advice. I'm not a financial advisor. I'm just a fat guy on the internet with an opinion. Yeah, that's because it's at a discount. You know, Schwab, the assets they've got under management is huge assets under management, so they're not going to the wall anytime soon. A lot of institutional investment in Schwab. If they went to the wall, that would upset a lot of apple carts for sure. So I'm giving this 15 cents. It needs to stay above the VWAP. If this trade doesn't work out for me, I'm probably going to lock this account for the day. No, it's a double top format. It's a double top area, so just be wary of that. And it's pulling back a little bit. So you always be wary when you look at the patterns. You always be wary of that next move up on the higher time frame. That's more of a kind of a devil horns. I'll show that in a minute. We'll see. Yeah, I'm out. I'm locking this one down. That's too much in one day for this account. I need to refocus, I think. If we get some good liquidity later in the day, some good volatility, then maybe I'll come back to it. And other than that, I'll just take the hit on the small account today. We're back under 20k. So 50k in 50 days, ooh, that's going to be very unlikely right now. But I'll show that on the trade recap. You'll be able to on the trade recap on YouTube later. I'll show that actual flush. And sometimes you want to try and mitigate against those risks, but trading pre-market is always a risk. You don't have the safety nets. If that happened during the regular session, it would have got halted. There would have been a volatility halt, so I wouldn't have lost that much. It's always a risk you take when you're trading under leverage. What's my goal? I was looking at 50k in 50 days. So I had effectively till the end of this month, well, almost to the end of this month, to get it to 50k. But I've had two big hits on it. I was basically trading it in the this morning, and I took a 5,000 share position for a nice move up, a nice breakout, and they hit the market with an offering, and I lost $1.50. So big flush. Had to put out a sell order, a marketable sell order. So I had to stick in a market order that was like, I think I got it. What did I get out at? It's like 650 or whatever it was. And I had to put a market order, well, not a market order, but a limit order down at $5 to get out at the best thing. It was just free fall. And you can't put a market order out there in pre-market either, because that won't execute. There has to be a market open to execute a market order. So that's another risk that you take. And if it blasts past your limits, so if I tried to get it with hotkeys, that didn't work. So I had to cancel the order, because it was not shortable, and there wasn't any. I didn't have any shares to short it. So then I had to. I had to put a sell order below the action. It was falling so fast, it was like trying to catch a knife. But it just goes to show, guys, if you learned anything from that, watching that happen, trading is risky. Do not trade with money that you can't afford to lose. I actually think the opposite there, Robbie. I think we might see a halt down first. FRC, let's go back to FRC. If it halts up, I might be long on it. I'm not going short on it. It's hard to borrow. It's on the short sale restriction. It's yeah, so Credit Suisse has got a 54 billion bailout. It's a temporary bailout. Hey, Farron. I've had worse starts to a morning, but I've had better. They don't have to pay it back. That's the whole point. It's makes rates. They pay it back in equity. That's the joke. Is that okay? We'll print some money. You can have it, and then you give us equity in the company. And over time, as the share price starts to rise again, the money that they're paying back outstrips the what they owe. It's yeah. I'm not going to touch this now. I'll wait. That offering needs to be cleared. Yeah. So let's see. That was painful. Maybe I should have bought at the bottom instead. Save myself some pain. Actually, no, it's that's good. I got out okay up at the top. Yeah. I'm not touching that one. Not for a little while, at least. Let's have a look at FRC. Oh, interesting. Supercom popped up over $2. what might happen? The ECB is due to put out their interest rates today, by the way. So, ECB, because of the whole Credit Suisse issue, I'm not sure if they will go ahead. Let's see what Lagarde does. That could be interesting. That's due out at 1:15, I think. Are you playing it safe, Ted? Because I'm certainly not. Yeah, I got caught in the flush with Thermogenesis. I'd just taken a long position and it flushed down after they announced a market offering. So unfortunately, I found myself on the small account down quite substantially, as you can see. 8,000 down on the small account. I've been in worse situations. I was in a worse situation on Monday, so I'll show you what actually happened, and you can make up your own mind. So we had this move up, we got a pullback, so as we broke new highs here, I looked for a move up and a test of $7, a retest of $7, and they announced the market offering, and I got a lot of slippage, quite a big loss, but it is what it is. So that's what trading pre-market is like. It's risky like that. You just got to be careful. Morning, Julie. I wouldn't say choppy. I'd just say that it's very quiet. There's not a lot of volume at all in the market this morning. Live person heavy down. I think the live person probably will bounce at the open because they didn't have bad earnings last night, so I think this is an overreaction on to their earnings. Maybe that'll bounce. Lapella just sideways, just lost 1,000 on the small account there with Lapella. That might come back. First Republic down hard. It depends on your contract with them. So I don't get charged per share, Ted. With my CMEG contract, I get charged per fill, not per share. Yes, you do, Flipjug. If you were holding Silicon Valley Bank shares when it halted last week, you lose everything, your whole position. The whole position gets liquidated. The bondholders and shareholders will lose their whole position. Now, that being said, if you were holding a short position, I know that's the most infuriating thing about it, Kyle, is that being charged commission per fill when I have no control. I can't budge. You can't predict what each trade's going to cost me because until I execute, I don't know how many fills I get. So it's a bit of a pain in the hole, particularly with a volatile stock. You get multiple fills and stuff, and it's a pain in the hole. But anyway, if you were short on SVB, and Dave will be able to, Trader Dave will tell you the same thing. It's infuriating for him because his equity's tied up in that until it's all unravelled. But you will get the full amount because the bank is being liquidated. Those shares are effectively worth zilch, zero, nada. It means that you borrowed shares to take that short position. You don't have to pay that back. Your obligation to pay that back to whoever the shareholder was is zilch, nada, nothing. So effectively, the position that you took as a short position, the full equity position in there is yours in profit, less fees, of course, commissions and charges. But that's the gross profit that you will get on the bank, less the equity that you put in. Well, the equity that you started off with. So yeah, if you've got a short position, you'll be laughing all the way to your broker when it all gets unravelled. Yeah, that's terrible, Kyle. That's absolutely terrible. Yes, I would say yes, Flip Jug. That's always a risk you take. That's always a risk you take. If you buy in, which is why I would not hold positions on any of these stocks today, the banking stocks, I would not hold any positions on them overnight because you don't know what's going to happen overnight. So just be wary in the current climate. If these stocks can continue to fall, do not hold long positions. No, it could get delisted during. So last Friday, Silicon Valley Bank got delisted pre-market. It got halted, so it can happen at any time during the day. If it gets halted, it'll usually be halted pending news. Then the news will come out that actually the regulators have taken over and they've shut the doors. Yes, you do, Mr. No. You bought shares in Signature Bank or Silicon Valley Bank because they've gone to the wall. Yes, you'll lose it. With Interactive, which it doesn't matter. Any broker, the shareholders will get burned. Bondholders and shareholders are getting burned. Now, 2008 was different because the bondholders got a bailout, and the shareholders for that matter. So everybody, whilst people were playing and gambling, the position just got covered, and that was what was wrong with the 2008 bailout. Is people that had invested in it didn't lose. It was the customers and the depositors that lost, not the investors. The bankers got protected. That seems like a lot, that, Kyle. It seems a lot. On Schwab in particular, when it is a high liquid stock. It is a very liquid stock. That seems like a lot. And it's not like it was hugely volatile yesterday either. I mean, on Schwab, I've seen orders going through like in the thousands. So a 400 share order should have been filled instantly. Yeah, so ECB raised the interest rates 0.5%, 50 base points. Yeah, be careful. I got burned on it. I got faked out on LiveWell. Back to it. So Lapella Pharma, I got burned here. as it broke highs. I thought we've got this nice little move up. We tested the VWAP, move up, moved it broke new highs. So I got in, and then it pulled back. So I got burned and I got out as it broke the VWAP. So I could have just held, but to me, it just wasn't worth the risk. It could break out yet. I mean, it's looking at it on the 5 minutes, it's a reasonable flag. Yeah, 273. There's a lot of sellers. They're not big sellers. Well, there's one big seller selling thousands. 277. So I would say volume's not bad. Not huge, but it's not bad. Lilani. Do I trade on the synthetic market as well? No, I've got direct market access, and I'm a synthetic shares. Knowing the difference between the two, it's very hard to tell, if anything. So there's a whole nefarious activities around synthetic shares, and yeah. So just. You tend to find that when you're going short, a lot of the shares you're borrowing are synthetic. They're Fugazi, whatever. They don't exist. So you're borrowing shares that don't exist. I mean, I've looked on CMEG, and it said I can borrow up to 100 million shares. It's shortable up to 100 million shares. There's only like 3 million shares in the float. I'm like, well, how can I borrow 100 million shares when there's only 3 million in the float? So go figure. See, yeah, but flip jug. That's the problem. Is that you get hit both ways. So if you're getting this is the thing I've got with CMEG at the moment. That it's only a policy that's come in recently in the new year. So they're making it more difficult for smaller traders or small account traders to be consistently profitable. So they've now moved from per fill commission charging, so per ticket commission charging to per fill commission charging. They've moved their leverage position to $5 and above. So it has to be at least $5 and above, and then there's all kinds of different risk analysis they do with stocks. So not every stock above $5 is going to get leverage anyway either. And then you've still got, if you're taking bigger share size to cover the amount of fills that you have to get hit, so to cover the commissions, so you can make a bigger return. The bigger the share size, the bigger the ECN fees that you get hit with. So you end up, if you're putting marketable orders in there, which most people do, particularly in the open market, you get hit with a lot of ECN fees, which is charged per share. You end up getting hit both sides of the coin, and it's becoming, if you've got a small account, it's becoming increasingly difficult to be profitable with CMEG, and that's all I'm saying with it. I'm still trading with them, but I am exploring other options. I've just not. It's difficult. If I was in North America, there'd be a lot of additional options I could use, because I've got an account over 30k, which means PD2 rule is not an issue. But in Europe, it's for me right now, it's CMEG or IBK, and I don't want all my eggs in one basket. I've got a lot of money with IBK and I trade with CMEG, so I don't want to kind of mix the two. So we'll see. Yeah, that's the trouble, Kyle. It's difficult to find a broker that's that doesn't hit you with the PDT, an offshore broker that's not PDT regulated. Which is what I'm saying. A small account trader is becoming increasingly difficult to day trade as a small account holder. Well, FlipJug, keep me posted. Let me know, because I've heard mixed reviews of Trade Zero. I really have. I don't know, Dan. It may do. I doubt it, but it may do. But we'll see. Oh, we've got 7 minutes to the bell. It'll certainly impact my tax liabilities. Yeah, but Lightspeed's only it's only good if you're in the US. It is a PDT broker, by the way, but it's only good if you're in the US. It doesn't cater to European clients. That's my understanding of it. That's the last time I looked at it, but that was. I'll have another look at Lightspeed because the platform is really nice. But my understanding was that they don't really cater to people outside of outside of North America. Well, with Trade Zero, FlipJug, it's not the platform that I've heard bad reviews from. It's them as a whole. I've heard they don't carry the full order book. It's not direct market access for one. They don't carry the full order book. It's a subset of the shares. And they also trade CFDs, so you've got to be wary of that. The spreads are pretty. So I've heard a lot of mixed reviews, and then I've heard somebody saying, "Well, it doesn't matter because I'm zero commission, so I can scalp it all day long and take a couple of cents here, a couple of cents there, knowing full well it doesn't impact my in and out quick." Well, you don't always get. Depends on your routing there, Ed. Some routes will give you ECN rebates, others won't. But you don't get ECN rebates unless you're placing non-marketable orders. If you're adding liquidity to the market, i.e. putting non-marketable orders in, then you might get ECN rebates. If you're taking liquidity from the market, so you're placing an order that's marketable and can be executed pretty much straight away, then you will get hit with ECN fees. Oh, you're still in it, Vol? Well, good luck. I hope it takes off for you, buddy. Well, I'm just going to take a quick bio break before the open. You can watch this this extended flat top, whatever you want to call it, and I'll be back in a second. So there's not a lot moving at the moment. There's a bit of volatility in the banks, not a lot moving. Credit Suisse, yeah, it's up, but Not huge amounts. Let's have a look at Credit Suisse whilst we're here. Oh yeah, it's barcoding right now. It's not doing a lot at all right now, Credit Suisse. It popped up to like 265, well, what have we got? 268. It did pop up to 268 first thing, but it's below the VWAP again, and the range is horrible. It's like a 2-cent range. Well, it might work. We'll go back to LIPO. I don't think they are, Flipjug. It probably doesn't know what direct access is. All these account managers, they go off script. They don't actually know. When you ask them a complicated question, they kind of freeze and they don't know what they're doing. Let's see. Oh, wow, what's happening with the Pac West? That's a big move. That says all you need. Morning, Monique. That says all you need to know, Kyle. I'm always skeptical when a company has its help desk in you know, India or somewhere where it's just cheap labor, Philippines or whatever. You know, customer service is not something they're looking for. They're just outsourcing for cheap labor. I'm not saying that there's people in those countries that are highly educated, you know, and do really well. That was a big pop. I got him for the break of $10 on that first candle. Put a stop just below the low of that last candle. Which bank are you talking about, mate, Monique? Credit Suisse? Yeah, I got stopped out. I'm not risking any further to the downside here. Not quite stopped out yet, but it's going to happen. There we go. I don't mind that. FRC is on the news right now. Oh, Schwab. That's a hard sell from Schwab. The only one that isn't hard to borrow, by the way. Well, let me just have a look at Schwab. Is it yeah, Credit Suisse got a central bank bailout, 54 billion, Monique. Doesn't help it though. When the rest of the market, Schwab, I'm gonna have to go to Schwab. It's the only one that's not. It's easy to borrow. It's not on short sale restriction, so Schwab is shortable. Let's have a look at some of the other banks that we've been looking at. Where's my cursor gone? Yeah, hard to borrow, short sale restriction. Let's see what happens with PacWest. The Gravestone Doji there on Schwab. On the 2-minute. Massive Gravestone Doji there on the 2-minute. So Lipo didn't do anything. Kind of didn't break over $3. That's what I was watching for. If it got over $3, it might have done something. But it's just ranging sideways around the VWAP. So that's LIPO. Just spreads on Schwab. 10 cents. So the banks are selling off again. Markets down. Not really showing any kind of bullish action on the market right now, and there's nothing, literally nothing on the scanners. I mean, look at that, there's 5 stocks on the scanners and they're not doing anything. Yeah, it needs volume across the board. There's just lack of. In fact, I'm going to put my filters on in terms of the volume right now. I don't want to be getting caught in some crappy low volume junk. So, in terms of movers, we ain't got a lot today, guys. Ah, we've got one here now. It seems to be having a little bit of a move. Altered to the upside. So this halted 35 to 90 seconds for a resumption. This popped up early, kind of early doors, and then sold off. So just be careful with it. Back in for the break of $10. Let's see if we can't make some money this time. Yeah, I'm not going to touch it with that offer. Not till that offering's cleared. We'll see. Your UiPath not got great volume. It's actually low volume on average, low relative volume. UiPath struggling at $10 with PacWest. I'm in at $10, so we're struggling at $10. Still struggling to break that $10 level. It's not a huge amount of sellers at 10. I see a new high of Dow is 1017. Know what it wants to do. There's a lot of sellers at 10.05, some 20,000, couple of 20,000 share orders at 10.05. So I'm just going to get out of this. As I was just about to get out of it, it decides pull back. Okay. Yeah, I'll have a look at it now. Yeah, that's... I can't trust that at all. This looks okay. UiPath. This 25 cents on the range, so that's not bad in terms of volatility. Pulling back a little bit now. FRC halted to the upside. Rob. Well, it's could be a double bottom, but if it breaks new lows, 57 was a key level on previous days for Schwab when it went down to like $45. But Credit Suisse making a move. It's Schwab and Suisse are pretty much the same. So this is Credit Suisse and this is Charles Schwab. Very similar pattern. Coming back down for the double bottom. PRVB. Provention Bio. My thoughts on it are I wouldn't touch it with Cody's. There's no range, there's no volume, there's no trade. You need volatility, which it doesn't have any. You need volume, it doesn't have any, and there's no trade on Provention Bio. Not today. In fact, $23. Is this reverse stock split? I think maybe. Up at 23.20, it was $7, and I think it's a reverse stock split. A few days ago. I think it went from yeah. There's nobody trading it. So that's my thoughts on it. Spreads on this are reasonable. Yeah, the good old days when the market was bullish, when we were in a bull market. That was the good old days. Yeah, we had volatility like we did on Monday almost every day. Yeah. How do you word the orders? I'm not sure what you mean, Farhan. Can you rephrase the question so I can understand it, please? How do I know where the orders are? Is that the question? And if that's the question, the answer is that's what level 2 is showing me. I can see the on the level 2 on the montage. I can see the orders on the level 2. So you get orders stacked up. And it tells you the share size, and it tells you the price that the order's at. And it also tells you the route that it's going through. So level 2, yeah. You look at the level 2, and you'll see it's sometimes called market depth. So you look at the market depth, depending on which broker you're with or what your education is. Some people call it the market depth. Most call it the level 2. So FRC is just currently they're in talks for a sale. Kyle, FRC. Yeah, so I'm just going to sit here and wait for something. Western Alliance is testing the VWAP. I've got a bit of a flag formation here on First Republic. Yeah, like Pala Farmer didn't do anything in the end. We're going to get the break of the $0.5, 22.50. No, you're taking if you're buying at the ask, you're removing liquidity, Ed. That's a marketable order. How many fills was that? About a dozen, I think. Horrible number of fills there. I wonder it didn't go in bigger size. Yeah, it's not my day today. I'm going to knock it on the head. It's probably going to be one of those days where it's better to just wait till the market's found its direction and everything's been decided to trend. Right now, there's no trend. It's moving up. As it starts to break new highs, it pulls back. Let's see. This is not looking strong at all. I've got my stop there at 21.20. So, given that the range is got a volatility range of 70 cents, not quite 2x on that on the ATR. We'll see. Yep. PCT, I'll put that on the small one. Looks, that's taking off. Don't know the reasons for that, but I'll take a look. Yeah, so First Republic Bank, which is this one, the port is evaluating a possible sale. That was half an hour ago. So PCT had earnings this morning. Q4 earnings, PCT. So it might go on a bit of a run, but I'll come back to that in a second. Good news or bad news for the investors? It depends. If they're getting a good price, then it's good news. It's certainly better than it going into liquidation, because the investors, shareholders, will get bought out at whatever the agreed price is, whether that's market price or whether that's an agreed offer price. See this, if we can get $23 on this, I'll be happy. Just put it below the $0.75 level. That's moving my stop up. Let's see, does it bounce on the VWAP and continue up? Probably not. I'm not seeing a lot of trending moves with good trending moves. Breaks the VWAP, I'm pretty much out. VWAP is 86. I've got 10 cents on the VWAP. The spreads it's 5-6 cents, between 5 and 10 cents. 10 cents at the minute. Now PCT pulling back now, testing the VWAP. It's choppy. It's a choppy day, guys. I'm not seeing any particular movement, a sustained movement in a particular. I mean, look at the scanners. There's nothing on the scanners. So, and we've not had that many volatility halts. I think I've seen 2 so far. So, yeah, it's probably one of those days. I probably should have sat on my hands today. I didn't really want to have a red day. I was having a nice little green streak. But there's plenty of time yet to turn it around. We'll see what happens. We just need some action that we can turn it around with. Sustained moves. Need to see something trending with a bit of volatility. Everything's very choppy at the moment. Even stuff that's moving up is choppy at the moment. Let's see what's going on. Well, Christine Lagarde's having a talk at the moment, so that might be impacting global things. But yeah, there's just nothing moving at the moment. So we've got Lipo did nothing after its initial pop up. So Lipella Pharma, that's the top gap, and then we've got that's 52% up on the day. Then we've got UiPath, which, to be fair, ain't great volume, relatively low volume. Then we've got the banks. The banks are still taking a lot of the attention. Well, let's see what Credit Suisse. I'll take a look at Credit Suisse. Yeah, Cody, it's probably not a bad idea if Credit Suisse, it's not doing anything. Even with the situation in Europe. So they announced the the rate hike, 0.5 percentage point. So next week, I will probably expect the Fed to hike their rates another 0.5% myself again. They'll probably take a similar approach. A lot of people were thinking that they might pause hiking the rates due to the whole instability in the banking sector, but I can't see it. Yeah, well, so let's see what, I mean, I'm going to be extremely annoyed if Thermo recovers to the levels that it was at pre-market, Thermogenesis. Oh, it's halted to the downside again. So this halted to the upside, then to the downside, then to the upside. I think that was a halt there. 53, no, it wasn't. Now it's halted to the downside. So Thermogenesis being silly. Back west. Ow. That stalled off hard. PCT's kind of struggling a little bit up there at 640, 650. So I've got I had this move. Pulling back a bit now. Breaking the VWAP. Sign of weakness when it starts to break the VWAP and close underneath it. So, I don't want you lying on the tripod. Good girl. Wait. I don't care about TikTok not feeding you. You can have one. Okay? There you go. Today's stream is sponsored by Duck Treats. Tender duck fillets for the chow chow. Yeah, I'm struggling now. Just need to find something to trade. And there ain't nothing. No, it's breaking lows, Schwab. And Schwab breaks 57, I might short it. Yeah, blew through the lows, so 57 is a key level. I don't want to take a short position and then it bounces at 57. I want to see it break 57, get the confirmation there. Pac West, he's got selling off. Got Credit Suisse there, not doing anything. $57's been a key level for Schwab this last two days. Bounced at 57 on Friday as well. $0.30 on the range. There we go. I'm in. Short. Break of 57. Give it 30 cents. Where's this going? Yeah, there is. And I'm watching it for a reversal to get out. First green candle to make a new high, and I'll be out. Break the $half here. Will be nice. $54.44 will be the halt level, so it's not. We're not testing that. Oh, Charles Schwab selling off. I knew PacWest selling off too, selling off hard. Western Alliance seems to be selling off. It's not breaking lows just yet, but first candle makes a new high. That's me gone. There we go. $800 back. I need a bathroom break. Need to change the scanners over. No wonder the scanners aren't doing anything. They're not selling the pre-market. If Alistair was here, he would have pointed that out to me. Cheers, guys. No, you don't want to hear me on the guitar, trust me. Are they bailing out that bank? Who's they and which bank? There's so many banks. If you're talking about Silicon Valley Bank that's kicked off all of this nonsense money, no, they're not bailing it out. It's already failed. If you are talking about Signature Bank, that's already failed. Oh, the banks that have already failed are not getting bailed out. What has happened is they've guaranteed the depositors. So people who had money held with the bank will be able to get the money back. Shareholders, bondholders, they're getting burned. If you're talking about Credit Suisse, which is the Swiss bank, then that has got a bailout, and it's got a central bank bailout of 54 billion. So, yeah, the one bank is getting bailed out, but the rest are the regional banks in the US aren't. What's going on there with MGNX? Not enough volume. It's a nice solid move up, but on low volume. Credit Suisse falling there. So let's look back at Credit Suisse. I mean, the Christine Lagarde's talking right now. But this is Credit Suisse, so this is the one that seems to be in trouble. There's no. They've been denying that they're basically saying that they don't have any liquidity issues. It just seems to be confidence issues and things like that. But they've just got a 54 billion cash injection, so the market doesn't seem to be taking well to it. No, it's not her Cartouche, so it's the central bank giving them the 54 billion. That was announced last night. Lagarde more talking about the yeah, she's more committed to fighting inflation than the is to saving the banks. Nice one, Penn State. Yeah, I got caught in the flush pre-market on that one, Penn State, and it knocked me $7,000 down. So, but good. I'm glad you made some money on it. Yeah, I thought it might rally, but it's not doing. But let's go back to Schwab. Given that that's not on short sale restriction, so and it's easy to borrow. So although I did get a crap fill earlier. Looking at a potential low of this 5-minute candle will be 56.40. Yeah, if you go long, it's okay when they're getting these bounces. If they're a bit kind of volatile bounce, that's fine. Back west, breaking new lows. Yeah, Credit Suisse about to go red on the day, it looks like. Despite that bailout. Breaking new lows. Yeah. Got into my position here. Credit Suisse now breaking low of day, going red on the day. Credit Suisse. Well, the last time Europe had huge inflation was back in the 1980s, I think, at this level. Looking for the break at 56. Yeah, so Credit Suisse has gone red on the day. Now, 215s. 215. Credit Suisse. I'll get rid of that one. I know you guys kind of don't like that tune, so it drowns me out. I thought that would be a good thing, but so I don't know. I think with paranoia around inflation across the board, it's worse in Europe. You're absolutely right. It is worse in Europe. I want to see this break 56. There we go. Credit Suisse is it's now testing 210, 212. Looking a little bit, break even. Now we'll get out the rest. Big banks crashing now as well. Which banks are which big banks are dropping now? Oh dear. Pulling back. Pulling back. I wouldn't say crashing, but certainly pulling back. And look, if they're selling off, great. While I'm in a short position, they can sell off as much as they want. I'm already in a little bit too deep here. Yeah, Goldman Sachs down $70. I would probably say that was probably more than just in the last week. I would probably say Goldman Sachs 17 a month. Finance sector's just down all over the place at the moment. Been a little bit of a bounce here. I'm just trying to hold through it. I'm not sure how long I should hold this. All dollar is a little bit more than I really want to, but that key level of 57 is kind of looking at me. How long did it take and how many accounts did I blow before being profitable? I blew up my account 3 times. And that was probably in a space of about the first 3 months. And then I started just kind of treading water. It took me about 7 months then to get profitable, to see consistent profitability. Nothing big, because what would tend to happen is that I have a nice run of green, and it still happens to me today. I'd have a nice run of green, profitable days, and then I have one big red day that wipes out so much, a big drawdown. And that's still what happens to me today. I'll have one big drawdown and a big red day. And that's for me is probably the biggest problem I have is leaving it alone when I'm in drawdown. And then coming just over trading is probably one of my biggest drawbacks. But it took me about 7 months, about 7 months before I started to see consistent profitability. Now, to be fair, I've got an analytical mind, and I'm a degenerate, so it kind of suited me to trade the markets. First one was about $15,000. Then I was and I reloaded for 10 twice. Yeah, so it's just over $30,000 I lost in the first instance. I had a small eToro account. I don't really count that because I had a small eToro account. I think I put $2,000 into it and blew that up. So I could, in theory, I could say I blew up my account 4 times, but I don't really count that. The guarantee, as a new trader, you're going to lose money, guaranteed. There's no getting away from it. As an experienced trader, you're going to have days where you lose money, even weeks where you're losing money. In some cases, months. I mean, I didn't make it. I actually lost money in May last year. The whole of May, I didn't make anything. It looks like I had a green month to the tune of about $11,000, $12,000 last May. But after commissions and charges and fees and the likes, I actually lost money in May last year. Which is kind of funny because I followed that up with a phenomenal month in June, and then beat that in July, and again in August. May was a bit like February. Last month was just, I had a great month in January, and then February was a dog. I couldn't catch a break in February. Still profitable, but it was just so difficult to trade. And I think I've got lucky. I say lucky. I've managed to take advantage of certain market conditions this month, which have got in my favour. I really should have got out there at the $0.50. They're all exhibiting a similar pattern. An inverse head and shoulders, maybe. But we're breaking, new high. On the 5 minute, we're getting higher highs. So this is probably not going to go in my favour. So I'm going to start scaling out now. Richie, it's not easy. It's a journey. So my advice to you is trade smaller. Everybody gets in. The main reason why people blow up their accounts is because they're trading too big. If you blow up your account, you've been trading too big. It's that simple. You should never be in a position to blow up your account if you're trading within your equity position. So don't just trade smaller. If it starts going for you, as your account grows, you can scale up. But you should never be risking more. I'd say rule of thumb: you shouldn't be risking more than 3% of your equity position, and you certainly shouldn't be risking trading as aggressive as I trade. That's for sure. Bollocks, what have I just done? I've just added to my position instead of scaling out like some kind of idiot. I'm in for 700 grand here. This needs to sell off, or ouch. I'm pressing the sell instead of the buy button. See, I'm not cut out to sell short. That's my problem. Should have been covering there. I'm thinking I'm covering and I'm watching. I'm not. Like an idiot. Right, what's moving? Which way? All the banks are moving. No, FRC's selling. PacWest is buying, is rallying. Western Alliance selling. Credit Suisse selling. Yeah, I'm gonna next candle to make a new high, and I'm getting it. $57. I mean, I was in for 57. I'll get out for 57. That was the key level. Start covering at 57. I'm way too high on this one. Over leveraged on this right now. Way over leveraged. Nice hard sell-off will help me out here. Is it going to sell or is it going to move up? That's the question. Bit of a market bounce there on the SPY. Well, that work might work in my favour. Super Chip, good morning to you, good afternoon to you, whatever. Not having a good day today. Better than how I started on Monday, but we'll see. First couple of trades I've taken haven't gone my way. Start unraveling this. If it can break the $0.50, I can start unraveling it. Yeah, I'm going to start unraveling it. If it breaks new highs, this candle breaks a new high, I'm just going to start unraveling this. Start scaling out. I can't believe I bought another 5,000 shares instead of when I was supposed to be scaling out. Even the best of us make mistakes. I'm not saying I'm the best. Don't get me wrong, I'm not saying I'm the best. I'm top 3. You certainly did miss the bell. Are you not on daylight saving time yet, Super Chip? You know the clock went back and then the clock went back in the came forward in the on Sunday. Very difficult day today, Alistair. Got caught in a flush earlier as well, which didn't help. Market offering. No, that's what cracks me up. Is Kramer's the best at this? He gets paid for being wrong. And if you're going to be trading, you've got to understand that you're going to be wrong from time to time. It's a given. You're going to have red days. It happens. Not got the volatility to come back like I did on Monday, and there just doesn't seem to be the appetite for. I'm in a good place. I'm in a good place for March. I'm certainly in a good place year to date. Just to put this into context, I needed $1,000 a day to get to equal my best ever trading month, which was January. Funnily enough, I needed $1,000 in profit today. So you know, the equity curve is not always up. Sometimes it comes back and pulls back. So means that we'll be going again tomorrow, and hopefully we can get that best ever month tomorrow. Not done yet. Just time yet today. If we get a bit more volatility and a bit more of a trend with any of these stocks. Put a stop here at 57. That's my stop. I would say let's look at what else is moving, but there isn't anything, so Spirion Therapeutics seems to be making a bounce off its bottom. Yeah, it is a market. It's a market stock trade on one. Yeah, absolutely. Let's have a look at Thermogenesis. Even with the offering, I don't like it. This hurt me. So I was up there at $7 pre-market, and it pulled all the way back to $4. So Thermogenesis, I don't trust it. particular with these flush, it moves up, big flush down, move up, big flush down. If you look at this pre-market where it got me, this is where it got me. I got in here, so this moved up and a little pullback. I got in here and then it flushed down. I was holding the position, it flushed down there. Market offering, and next to market offering, managed to get out for $1.50's loss per share. So yeah, I don't trust this. It's got too many flushes today. I had obviously the market offering flush, and then there's another one there, another one there. There's nothing to say that this isn't going to, well, there's another one here and another one happening. So yeah, I don't trust Thermogenesis. It was good for me yesterday. Very quick trade yesterday. I made 10,000 on it, but I don't trust it today. Let's have a look at yeah, this is coming off a big, so look at this on the 15, you'll see what I'm talking about. Huge sell-off yesterday, and then it's just bouncing on that bottom. So this was a $4 stop yesterday at close of business. Now let's have a look at, was it earnings, or did it have bad news, bad press, clinical trials, or patent, or let's have a look. What was the news catalyst yesterday for the sell-off? Right, Esperion reported partner Daiichi Sankyo Europe said Esperion is not entitled to receive milestone payments based on clear outcomes data in the trial of bempedoic acid to treat cholesterol. So basically, they've had a bit of a dust-up with one of the partners, Daiichi Sankyo, and as a result, they tanked after hours yesterday. Looking at 64 million, just shy of 64 million in the float, and it's trading on 14 times volume. So 14 times, so it's a 14x relative volume. So Esperion, if this gets over 250, it could be of interest to me. I think Cheltenham would probably be a bit more profitable for me today. well done, Jack. I'm pleased for you. Yeah, so just got stopped out on Schwab. It's struggling at 57 though, so I'll keep an eye on that later. In the meantime, I guess let's keep an eye on the market. There's not a lot to report. It's one of those days. If let's see. No point taking a position if it's not going to go your favour. You don't know for sure if it's going to go your favour. I mean, FRC, we lost a couple of K on that FRC today. Back above the VWAP, maybe. Very choppy on the banks today. I thought there'd be a lot more volatility, but it's just very sideways chop today. And just trade within... yeah, just trade within your account size. You don't have to be making 6K a day like me. You know, $60. If you've got a small account, $60 is enough. As long as you're covering the, as long as you stay in a flow, as long as you're covering your commissions. If it's $50 commissions and $60 in profits, then you made $10. It's a profit. And when you're starting off, that's what it's about. It's about staying afloat, protecting your equity. It's not about making money to start off with. People get in it wanting to make money instantly, and that's why they lose. You've got to learn the process. You've got to learn a strategy. You've got to get competent at the strategy, executing your strategy. You've got to get disciplined in that execution of your strategy. And you've seen with me today, not every trade is going to go your way. Not every day are you going to make money. I made sizable amount of money yesterday. It was a 7,500 up yesterday. I'm 11,000 down today. So look, it is what it is, and we go again tomorrow. So yeah, it's a choppy day today, and I'm going to wrap it up, take the dog for a walk while it's bright outside, and come back and maybe check it again later. If you're in the Day Trade with Tony community, then if I'm trading later, I will be in the Discord, trading live in the Discord. So don't worry, I'll see you in the trading room there, in the live trading room there. And if I don't take a position, you probably won't hear from me. So in the meantime, enjoy the rest of your day, guys, and I'll see you tomorrow, an hour before the market opens. Red day from me, and I'll see you later. Let's